All right, so let's break down the webinar here ending 7/11/2025. This was a pretty challenging week when it came to being patient. Now, you guys know that word patience. I really don't, I don't want to say I don't like it, but when I used to use the word patience, in my mind, it would imply that I didn't really I wasn't diligent. I wasn't ready to act almost, right? It was almost like I was just sitting there in limbo. I don't like that. I like the word being diligent, right? Being diligent means you are ready to act as soon as the strategy, the opportunity presents itself. Okay, we have three main jobs as a day trader. Number one is identify healthy opportunity. Number two is execute on this opportunity. Number three is manage the trade. Okay, three jobs. That's our goal every single day. Identify a healthy opportunity. Now, when I sit here and say this week was challenging, it was because, in my opinion, according to our strategy, it didn't present itself as often as usual, which means it implied that you would have to remain extremely patient, sitting on your hands, watching the chart, and not doing anything. And this is where a lot of trickiness comes into the game. Okay. What's the saying? Idle hands do the devil's work, right? That couldn't be further. I mean, that couldn't be closer to the truth, in my opinion. Monday morning opened up. Now, we have the pit numbers here. We got previous day low, we got end of day, we have previous day high. So we gap down. So every day I have the same exact approach. Okay, I'm either going to target upside pit number or downside pit number. If there's no pit number, I'm just targeting the next target. Now, the way we like to do this is we identify who's controlling open print. Okay. There is an 80% chance that price is going to go from open print to pit number or pit number. We just need to understand which one it's going to go to. Okay. So Monday morning opens up, open print established. Cool. So now when I'm looking at this, I'm going, all right, we have a red cloud. Initially, I would like to see buyers try here and then possibly capture a long play targeting open print. So selling comes into the market. We get a little bit of crazy bit of wick, a little wiki here. The orb, which is another tool we've been using, so I'm going to highlight that, has been established. Okay. So I'm watching this and I'm going, all right, if I get a moving average cross here followed by a red bar, right, like we got right here, I got my call options ready to go. Okay. I'm getting ready to get into the market long, preparing myself, right? I already know what criteria I need to get in, but I'm not going to execute. I'm not getting into the position until I get the RBI. Okay. And just so everybody, if everybody could just check their mute, I'd gladly appreciate it. So basically, I'm looking for the moving average to cross, the red bar to get ignored, and then I'd get in the market long, and my stop would go below the red bar. Well, we don't get it, and that's completely fine. The edge has just saved us money, time, and mental capital. Okay, like when the edge is about to present and it doesn't, that's actually telling us something. It's telling us that buyers, they weren't strong enough, right? But it's also telling us that the market's so choppy. It's not necessarily a visual to go short, right? It's, in my opinion, it's more like, okay, buyers tried, they failed. In some cases, it could indicate that the sellers have the ball. But in this case, especially it being a Monday, I'm just staying patient. Um, so I'm not doing anything. We get a large red candle. We couldn't close outside the orb. Price comes into open print here. Okay, check this out. This is key. Price comes into open print. Now notice here, where's the moving averages at? Okay. 1 hour is literally right on price. Okay. It jumped down here at 10 o'clock. We get a green bar that rallies into the open and we have a healthy 5-minute trend. Okay. So it's very important to use these moving averages to help you identify what healthy price action looks like. I didn't short this, but this was a valid short play. I didn't short this though because there was no initial moving average cross. It was very close, but there was no initial moving average cross, but there was definitely healthy trends here. Oh, and another reason I didn't short it is our downside target was less than $1 away. Okay. So if the downside target's less than $1 away, I would rather see what price action looks like as we're at the level right? Because if we could identify weakness, like right here, this is what we call weakness. Why is this weakness? Because look at the moving averages, guys. The moving averages are right on the candle. Look at right here when we first come into the level. Where's the moving average? The moving average here, this is so, guys, you get this moving average concept, I'm telling you, everything changes, right? Look at how far away, right? The first time we come into this previous day low zone, we're about 50 cents away from the moving average, which isn't terrible, but we're far away from it, right? Like right here, we are starting to get a bit far away. We got a violent move. This candle was red. That's a very quick move down to it. Now look right here. Look where the moving average is and look where the candle is, right? This is condensed price action, okay? Consolidation. This is what we call acceptance, selling pressure, okay? This right here, like when I see this, there's no way. I don't trade reversals anyways, but when I see this, I'm like, all right, where's the 1 hour 9? It's on price. Okay, we just rejected open print twice, right? Once, twice. EMA clouds red. That's a valid short play right here. I didn't take it, but that's a valid short play. Matter of fact, I just missed it. I just wasn't in front of the screen right there. But look at it. And I just really want to distinguish the difference there, okay? The gap in the moving average, the price, right? And it takes a little bit to get like familiar with this. I don't want you guys to have analysis paralysis come Monday because you're just super focused on the moving average extension. But go on demand. Get some reps in because this has helped me tremendously. Price sold off, a lot of selling here. Once again, this is what we call weakness. Price breaks through. Now, once price breaks through and I'm not in the trade, let's talk about it because this is where the issues happen. Okay? You missed it. You had to walk your dog. Your girl was trying to tell you a story, or whatever it may be. You missed the trade. And everyone in the Discord's like, oh shit, I'm up 80%. I'm making tons of money. And you're sitting there going, damn it, I'm in nothing. Okay. This is so important, guys. Like, cause when I missed this trade, I was like, oh shit, look where the 1 hour 9 is. Super far away. I'm like, there's no way I'm really going to get into a trade here. I mean, if I get if it consolidates here for the next 30 minutes, I get an RBI or a GBI, I'll take it, but we didn't. Now, yeah, there's been no moving average cross, but we understand the context, right? Let me bring it back real quick. Our three main goals as a day trader, like I said in the beginning of this, number one is identify healthy opportunity. Number two is execute on the opportunity. Number three is manage the trade. So the edge, the strategy, its main purpose is to identify healthy opportunity, okay? So if you don't get a moving average cross, but you could identify a healthy opportunity, then you're good. Now, a lot of traders are in different parts of their trading journey, which is why I don't tell everybody to do that. Okay. If you haven't established consistent month or two, then just trade the strategy until you do. Right. But if you're starting to lock in some consistency, you're starting to feel a little bit more confident in your market reading under like capabilities, it's okay to take a setup that doesn't get a moving average cross. But make sure the 1 hour time frame is intact. I just wanted to say that real quick. But still, guys, I'm in no trade. I haven't taken a trade yet. Look, we're very far away from the 9. I'm literally watching this from afar. I go to the gym. I go take care of this, that, and the third, do a little whatever. And then this happens. We get this massive rally up, and I'm like, oh, cool. Maybe I'll get an entry here. No entry. So, guys, literally, I took one trade this day, and it was right here. It was actually my best trade of the week, like in terms of profit. I took a short play right here. It was an absolute smoke show because it happened at 2:00, right? 0-day SPX contracts literally went from $400 to like $1,200 in a matter of 10 minutes, right? This was a really good trade. But why did I take it? Because look where the 1 hour 9 is, okay? Green bar, ignored, come up, retest, reject, come into the 1 hour 9. So right here, when I get a green bar that gets ignored, I now have minimal risk in crazy upside potential, which is why I took this trade. So moral of the story, I took no trade until 2:00, made more money than I made on any other day of the week. And it was because I was diligent. And my mindset wasn't, oh, I got to get this money in before 10 o'clock so I can get to work. But no, none of that. Like when the healthy opportunity is there, in your execution is there, you don't like that is why that's our goal, right? Like if your main goal every day is just to identify the healthy opportunity. Now, this doesn't mean it's got to be a perfect, all the stars align opportunity, right? None of that bullshit, right? Because then you won't do anything. The goal is to let the 1 hour trend catch up and trade the RBI GBI. Like at the end of the day. And when you're not getting that, be okay with not doing anything. Same thing happened Tuesday. Morning, garbage. In like the analogy I always use is you would never get in your car tomorrow and say you were late. You would never get in your car and go, "Oh, I gotta get to work very quickly, so I'm gonna drive on the wrong side of the road the whole way." Right? Like you would never, that would never even come to your mind because it wouldn't serve you. Right? You would get pulled over, you get into an accident, it's highly dangerous, you might hurt somebody. That's how we have to view the market when there's no healthy opportunity. It does not serve you. Yes, you may be able to get in and get out real quick and make a quick, 20% and be done and get to work. But what you're actually doing is programming your mind to trade an approach that isn't repeatable or reliable. Therefore, when you make money doing it, you step into the market tomorrow thinking it's going to be able to be possible again, but in reality, it's not repeatable. So now you're starting to make bad decisions over and over, and now you're going full tilt. You blew another account, and then you're blaming something else. You go, oh, the market got me. No, you got yourself. Okay? Like, this is guys, I did this shit for years, which is why I'm really hammering in on this right now, because it is the main reason why people lose in this game, is because they cannot wait for their strategy, their approach. I don't care if you trade trend lines. I don't care if you trade breakouts. I don't care what you trade, but you got to know what it looks like. You got to have repeatable criteria for it. Otherwise, you're playing the gut feeling where it feels good in my gut, so I'm going to take it, and that's just going to be based off what sort of day you're having, and that's just not repeatable. So Tuesday, open print, price comes into it, cool. Once again, guys, I'm letting the strategy do the work. We have upside targets. I want the moving average cross here, and I want the RBI GBI. We get the red bar. I got call options locked and loaded. Okay, if this gets smoked and we get that moving average cross, I'm in it. Brant, don't get it. Okay, cool. Price comes up, retest this level. We get this nice green candle. We have a healthy trend. This looks really good, but we did not get a red candle to wipe the bottom of it. So there was no moving average cross. There was no GBI here. And what happened? There was no continuation, right? Like that's what, like, once again, guys, the edge isn't the edge just because it's the edge. The edge is the edge. The criteria is the criteria because when that criteria is present, the conditions are healthy. Okay? That doesn't mean the market doesn't move when it's not present. But what it means is when the criteria is present, we now have pocket king. And a pocket king has a pretty good chance of winning. It doesn't have a perfect chance, but we don't need perfection. We just need reliable. Like the name of the game is reliable and repeatable. The name of the game is not be right every day because you have great technical skills. The name of the game is I'm trading a repeatable approach that's reliable and I can manage risk appropriately. See how the edge will protect you. Like right here, once again, price is selling off. We're back above some critical levels. We're coming into open print. If I get a red bar that gets ignored here, I'm getting in long. Don't get it. So what goes through my mind? Chop. I want nothing to do with this price action. It's garbage. It's not healthy. It's not fruitful. Therefore, I am not going to participate. Come up, come up, come up. Moving average cross. I miss it. Once again, this is when I go to the gym. Miss it. Little red bar here gets ignored. I miss it. Do I go, oh shit, I missed it. Damn it. No, dude. I go, it's completely fine because if this leads to healthy trend in fruitful market conditions, I will get another opportunity. And look where the 1 hour 9 is. We're below it here. If we get back above it, then there's a possibility we're going to see previous day open print. That's a lot of price action. So therefore, I'm just going to be patient. We go up. I'm like, oh, maybe we get a red bar to get ignored here. We don't get it. Now, guys, everybody in my mentorship knows if and when you ever get an RBI or GBI, you are mandated. This is non-negotiable to draw a box around it. Okay. Anytime you get a red bar or green bar that gets ignored, draw a box around it. This is what we call the area of value. Okay. This is the level that until sellers take this level, buyers got the ball. Okay. This is the level where if and when price comes back in, you are going to find your next opportunity. Red bar comes in, ignores it by about 4 cents. I'm in long, stop below the red bar. Okay. Now, a lot of people go, wait, Josh, this wasn't a green, red, green scenario. Correct. It wasn't. But what is going on? We're retesting a previous RBI. So once again, the RBI sets the context, right? Buyers got the ball, structures being formed. Now the red bar comes into the area of value. Whoever shows up here is going to hold the ball. So therefore, if I get another RBI here, I will enter in because the RBI is just another way for me to manage risk. I always know where I'm getting out of my trade here. It's about a 50 cent risk here. And we caught a really good move to the upside. Josh, why did you take profits where you did, which was pretty much at the top of this candle? A, it was coming into pre-market high, and B, look at the moving average extension. So the way I look at a moving average is there's a very high chance that it's either going to come back to the moving average on a pullback in the next candle or two, or it's going to consolidate and get choppy and allow it to catch up. Either way, I'm trading SPX 0-day contracts. I don't care if you're trading SPY or futures. Ask yourself, are you willing to hold for that pullback? This pullback here was more than 60 cents. Look at this. 63-cent pullback. Do I want to hold a 62-cent pullback? Absolutely not. That'll cost me more than half my profit. So, once again, don't take it. Look what happens. Pocket literally means pullback every single time. So, that was it for me. I was one and done that day. The next day was a bit frustrating. I want to talk about this. But once again, this is our job. Our job is to only trade the healthy opportunity. Price opens up here. We get a lot of buying off the open. There's we got upside target right here. I'm not going to waste time looking at what the other upside targets were because it's kind of irrelevant for the lesson that we got here on this day. But buyers show up very strong. Okay, cool. Right here, we got a red candle, and I wrote in the chat, I said, listen, guys, if we get an RBI here, don't take it. It's very far away from the 1 hour, okay? So red bar doesn't get ignored. This one did, though, right? This was a red candle, and it did get ignored, okay? And it was off a level. But there was no moving average cross within the last 3 hours, and look how far away we are from that 1 hour 9. So there's no trade for me there. We get the snap back into it. Price is extremely volatile. It's all over the place. I'm waiting for a green bar to get ignored here for a possible short play down to end of day. Okay, the gap fill. Price goes up, comes down, goes up, comes down, goes up, comes down, goes up. I get in short right here. This was valid. Okay, this was definitely a valid trade. It was after 12, so it wasn't logged in the data report. But this definitely was a valid trade, valid entry, valid stop loss, about 35 cents away, which I ended up getting clipped. Once I got clipped, I was done trading. This was garbage. It did end up smoothing out here, and we did get another moving average cross off open print or whatever that was. But it was just chop. It was just garbage. And once again, number one job is identify healthy opportunity. Your number one job isn't to be right today because being right is fleeting. It doesn't always work or last, right? How many of you, there was a time, guys, I was right. I had a month with a 93% win ratio. Darren probably remembers this. Trading reversals, 93% win ratio. Out of 21 trading days, What was it? Like 20 of them were green. The one day I wasn't right, I blew my whole account. Okay. So being right most of the time doesn't guarantee consistency. Okay. This is very important. We have to distinguish the difference. The goal is not to be right. The goal is to execute repeatability that's reliable. Like that's where the system lies. Okay. Like the system that generates consistent profit is not from being right. It's kind of hard to grasp because obviously you need to be quote right to make money, but in reality that's not always the case. You just need to execute your approach to make money, right? So I was over it after that. I was, I after those first two hitters and this week too, Monday and Tuesday, I wasn't ready to just start giving tons of profits back to the market just because it wanted to be a bit shitty. Thursday, smoke show, absolute smoke show day, beautiful day, and I just really want to talk about it. Okay, so we got end of day right here. We got open print. We got all of our levels. Market opens up. Now it's non-negotiable. When I see my criteria, I act. Okay, there's very few reasons, if not zero, why I don't act if I see my criteria. This day we opened up right at end of day, sell off, moving average cross, green bar ignored. I'm in short right here. Okay, stop loss is going above the green candle with a little buffer. Okay, buffer means 10-15 cents above it tops. Okay, I was using this candle right here. Very tight stop. If you guys see here, guys, I'm rarely risking. Well, let's see here. On this, I'm risking 48 cents. Okay, I trade SPX. I can't play around. I like to risk 40, 60 cents. Depends on volatility, honestly. But we get a very green candle, gets smoked. I'm in short. We start to get a nice push. I'm trading 2 SPX contracts now. I take profit on one, and I'm looking here for a move down to previous day open print, which is right here. We don't get it. I end up getting stomped out of my last contract on this. I think I made about $100 on this trade. Great trade, great execution. We can't control all that wild, crazy nastiness. Only thing we can control is how well we executed on our system that's reliable. That's it. And I literally have it stamped on my desk. You are only as good as your ability to execute your strategy. Not some days, not Monday, right? Like when your strategy's there, it's telling you conditions are healthy, get in. There's an 81% chance over the last 10 months that this has a continuation of a dollar. Okay? That's it. That's all I know. That's all I need. Price rallies up. Now, I'm looking at the trade before and I'm like, okay, that just tells me that buyers just showed a lot of significance. On SPX, this was literally happening at the 50 EMA, which makes a lot of sense, right? It was coming into the 50 EMA. There's definitely, you're subject to a lot of horseplay at the 50 EMA on SPX, if I should say. Price rallies, okay? This is very important to talk about right here, guys, because we got into the market long right here. The old Josh would have been like, shit, this thing's ripping. I'm getting a red bar here that's ignored, but it's so far away I can't take it. Josh, why'd you go long right here? I went long right here because A, it was off critical level. B, it was following a moving average cross. C, there was a red bar to get ignored. And D, final answer, look where the 1 hour 9 is. It is literally on the area of value. This is very high probability for a continuation. Price rallied. Pulls back. This is why, guys, it's mandatory. Box around the area of value, okay? Because what else is going to keep you in the right state of mind when you get this 75-cent pullback? What was the range here? Oh, never mind. Felt like 75 cents. It was 40 cents. But you get this 40-cent pullback here, but it comes into the area of value. This is where we lean on our moving averages, okay? Like, trading is extremely stressful, okay? We need tools that keep us objective under stress. That's the name of the game. 95% of traders fail because they can't remain objective. They start getting scared. They start overthinking. The longer you trade, the more you get burnt, the harder it gets. It doesn't get easier. I'm not going to lie to you. I'm on almost my 7th year. Like, yes, it's easier for me to deal with pullbacks and drawdown and holding trades, but it's only easier because of the way I use my moving averages. Like when I'm looking at this, I'm going, dude, we're bouncing off the 1 hour trend. I've collected 10 months worth of data that tells me when we're bouncing off that 1 hour trend, it's very highly probable for a continuation. This is what we call acceptance. So regardless of the pullback, it is what it is. And what happened? Price keeps pulling back up to it, pull back up to it. So this is how we determine acceptance. Get very far away, we exit the trade. Cool. I go away, I go to the gym. I'm not that happy with my next entry, which I ended up making over 100% on this trade, but I went long on this 1225 candle, okay? And we all make mistakes, right? And I don't even know if I want to call this a mistake, but let's talk about it. It's a red candle that gets ignored. Price rallies, we lock in a really good trade right here, right? We get very extended from the moving average. So we take profit, we go to the gym, whatever. But I'm monitoring on my phone, right? I'm like, if price comes back to this area of value, which it does, of course it does, okay? It comes back to it, and look at, let me take off the EMA cloud here real quick because this is very important. And if you get this, it's going to help you tremendously, okay? Okay. What should we be thinking when we see this? All right. We literally have previous day high, red bar ignored, rally. We just came into the area of value. There's a pocket here between price and the moving average. At this moment, that I'm like, dude, this moving average is going to act as a magnet and pull price right up to it. So once I see this candle wipe the top of this candle, I'm in it long, and my stop's below this candle. Identified healthy opportunity, used my principles, stop below it, captured a beautiful move here to the upside. Okay? There was a red bar ignored right here, which you could have gotten later if you missed that one. Okay? Once again, though, using the area of value, using our strategy to tell us the conditions of the market are healthy. Bam. Great trade, great day. I was feeling really good about how we traded that day. And then Friday's live. I mean, most of you guys were there. This was blueprint. This was literally once again, this is what we plan to do every day. Okay. On the live, you'll see we're getting selling. And I'm just walking everyone through the fact that until the edge presents, the conditions are unfruitful, right? Meaning unproductive, meaning I don't want to participate if my intention is to make money. If I'm participating in the market, it's because my intention is to make money. If my intention is to make money, there's an assumption there that I'm going to be trading healthy market conditions. In no way, shape, or form is my intention to make money by chance or luck or with an unrepeatable or unreliable approach. I only want to make money and reward myself for trading. This is literally what Mark Douglas told us. Like, Mark Douglas wrote a book on this, multiple. He said, do not get into the market unless you have simple criteria to follow. He literally, his exercise in trading in the zone is literally, he's like, I don't care if it's just a moving average cross. He's like, I don't care what it is. Just make it something that you're not conjuring up in your mind, okay? Like, it has to be a visual. And that's why I love moving averages. And the critical level is just the level where large money makes their move. Patient, moving average cross, red bar right here gets ignored. We get in the market long. This candle was green. Therefore, that's why we got in. We do not wait for the candle to close. If we waited for the candle to close, we wouldn't have got in that one. We would have ended up getting in this one. And look how skewed our risk reward would have been. We probably wouldn't even have got in it. Very important. We do not wait for the candle to close. The RBI already tells you enough. Beautiful move here off previous day low. What I loved about this was the pre-market plan was if sellers lost previous day low, bearish structure was going to crumble. And that's exactly what happened. Amazing, beautiful.